What is going on, guys? Ollie here from IYF. I hope all of you are having a fantastic week. Today is Friday, it's the end of the week. It's also the 31st of January, so it's the end of the month. And I thought I would do a quick trade recap on what I thought has been trade of the month. So in this video, we're going to be looking at Aussie yen, which has been an epic trade and was a short trade that a lot of the community took, if not all of the community were involved in this trade. And rather boast about the amount of pips that were made or the percentage gained on this particular trade, I want to dive into the technicals, I want to dive into the mechanics, and I want to really break this trade down for you so that you understand exactly the reasons why we took it, the fundamental influences that have also pushed this in our favored direction, and also emphasizing the power of the higher timeframes as well. So without further ado, let's get into it. As always, starting on the higher timeframes, we're going to be starting the analysis on the weekly time frame. So we can see here that price is within a bearish sequence on the weekly time frame, making lower highs, lower lows, lower highs, lower lows. And we could also identify that price had been making a very clean sequence of impulse and corrections. So we could see that this was an impulse, this was a correction, we could see that this was an impulse, another correction, another impulse, and therefore this whole phase here, despite making higher highs and higher lows on the daily time frame, was also the corrective phase of the market. So having identified that on the higher time frames, we could also see on the weekly that we were approaching this major level of around 76, so a psychological level where previously we've had some very violent reactions. I'm going to ignore this wick to the downside. That was at the very start of 2019 with the flash crash. And you can see here that when we broke this level, we came back up to retest it, and then we had another very impulsive leg following from this key level here. So after this impulsive leg, price was correctively making its way back up into this area of high value. And you can also see that we were interacting with the weekly 50 EMA as well. Now, we also have this major weekly descending trend line, which price was still under. And we were still below the monthly 50 EMA as well. So as we were approaching this area of high value, you can see here on the run up, there was several weeks of buying up into this area. And then we had this bearish engulfing candlestick rejecting out of this key level. So this is the area that we had already identified. We were already forecasting some sort of reaction from this level. And this is when we were starting to gain interest in potentially looking for short positions on this pair. So let's drop down to the daily time frame and see what we were looking at that time. So I've just removed some of the most recent data so that we can go through the thought process together and basically understand what we were looking at. So at this point here, it's clear to see that price was making a series of higher highs to higher lows, higher highs, higher lows, higher high. So we're in a bullish sequence, there's no denying that. But we were aware from the higher time frame analysis that we were entering a very, very interesting area. We also understood the nature of price action as we entered this area of high value as well. So that's really, really key. Now, we could also see that we've had this fairly impulsive leg rejecting from not only a key psychological level and also the weekly 50 EMA. We also had this third touch of this structure, which is in the form of a rising wedge. So we know upon a third touch, there's a high probability of a reversal or the start of a new impulsive wave. And we know, following from previous data, that when we see impulsive legs like this, it's highly unlikely that price is then just going to shoot up and reverse aggressively, continuing in the overall trend, which is obviously bullish in this case. So being aware of that, being aware of where we are in the charts, being aware of how we entered this area of high value, we were potentially looking for shorts. Now, what we needed to see is obviously further development and really allow the market to show its hand and confirm to us that there is going to be a change in direction. So there's a couple of things that could have happened here. The first thing is that we could have seen a sort of a minor correction like this, and then price potentially could have continued moving to the downside like that. The second option is price could have just correctively made its way higher and higher and higher like that, breaking above this previous high and continuing in the bullish theme. Now, the third thing was price could have correctively made its way into this area here, which is our favored Fibonacci ratio, so the 78.6. And if we did see price decelerate into this area, then that would confirm this is the formation of a new lower high, therefore invalidating the bullish trend. So let's just play this and actually see what happened. So you'll notice that I have this fib drawn from A into B. So from the last most significant high to the current low, you can see that we've had this fairly aggressive wick, this downside wick rejection into this level of structure. So that enabled us to then plot a fib as price had confirmed it was retracing. So now we are waiting for price to retrace into a desired Fibonacci ratio. So let's continue playing this and just see what happens. So now you can see we're sort of interacting with the 78.6. We really want to see a deceleration when we enter this area of value. And you can see here price is really starting to stall. We've got multiple candles of indecision. So this is on the daily time frame. We obviously didn't take an entry on the daily time frame. We want to be able to execute far more surgically. We want to be able to execute with tighter stops, increasing that risk reward. So as most of you guys know, trading is a game of probabilities. We're always looking for the highest probability setups. We're always looking for the probabilities to be in our favor. So let's dive down into the intradays. Let's have a look at the 4-hour and the hourly. I'll show you guys where we took an entry. I'll show you guys where we placed our stop loss, and then we'll see how the trade played out. So we've covered the daily, and we understood that price was decelerating on the daily time frames. We could see multiple candles of indecision. But what was also really important to us is how we arrived within this area of confluence, within our favored 78.6 ratio and the 88.6. So we could see, following from this rejection of these higher time frame confluences, we could see that this was noticeably more impulsive. So therefore, we were treating this retracement phase as the corrective phase of the market. But what was also really interesting was the way that this evolved into this area of confluence. So we can see here that this is in the sort of formation of a rising wedge, has that overall structure to it, which is a bearish reversal pattern. And as we decelerated within this area of confluence, we can see here that price also printed an evening star formation, which is also a bearish reversal candlestick formation. So we also have this structure, which if you want to call this a head and shoulders, you can call this a head and shoulders. It's a bit more slanted than my liking, but you can see here that we do have this structure of this left shoulder here. And what we were looking for is a break and a retest to also confirm a new lower high on the 4-hourly. So let's play this and see what happens. So again, you can see here price is stalling. It's really failing to break higher and create those new higher highs. So let's drop down to the 1-hour and see where we took our entry. So when we were observing this on the 1-hour, waiting for that confirmation, we can see that we had this break and a retest of this ascending trend line, and price failed to make a new high on the hourly and then printed this beautiful bearish engulfing candlestick. So at that point, that was our confirmation to take an entry, and our stop loss was 30 pips or so above previous high and above the psychological key level and above the 88.6 fib level. So let's just scale back up to the 4-hour and then we can have a look at downside targets. So for those of you that are involved in our community, you'll know how we use fibs. You'll know exactly why we use them for retracements and targets. I'm not going to go too much into the strategy itself, but targeting the minus 27% had a nice downside confluence factor as well, as it was in alignment with psychological key level 73. That trade there offered us a nice 9.3% trade, or 9.27 if you want to be specific, and a nice 300 pips. So let's play this and see what happens. Now, around this point here, we were interacting with the daily 50 EMA, and we also had that potential dynamic support from an ascending trend line as well. So we removed some profit at this point here as part of our management strategy, and then we were just seeing if we could retest previous lows around here, and then finally the minus 27%. So let's see what happens. So obviously Sunday evening we saw the market gap, and this was all off the back of the recent virus outbreak, the uncertainty in the market, and when there's uncertainty in the market, investors flock to safe havens like the Japanese yen. And the other fundamental influence, if you like, was that Australia is China's biggest trade partner. So when anything negative is happening in China, it directly influences the Aussie dollar. So we had safe haven flow, which is JPY strength, further uncertainty coming out of China, which is a negative for the AUD. So that's AUD weakness. So those two key fundamental factors there massively helped this move in its favored direction. But as I've already covered, the technicals were all there. So the technicals align with the fundamentals, and that is why we have just seen this continuation of bearish momentum. So as you can see here, we've now retested previous lows, and let's just see if we fulfilled the minus 27%. So there we go, minus 27% now fulfilled. And there has been no major pullback on this pair at all. There's been a lot of bearish momentum. So trade complete. I still think there's downside for this, but when we look at AUD USD, price has now tested a major liquidity demand zone, which is 0.6700. So I would be very surprised if this level snapped. And you can just see here that price is very impulsive. We've not had any pullback whatsoever. So I am expecting a retracement from here. And then we just need to see what happens next, whether we create some sort of double bottom or whether we create a continuation pattern. And this does in fact continue moving lower. There's talks that the Chinese GDP could have 2% removed from it, which is going to have a major impact on the Aussie dollar and in fact the rest of the world. So that will be very interesting moving forward. But as I say, I am expecting a retracement on AUD USD from here, and therefore we can correlate that with other AUD cross pairs like AUDJPY. So let's just round this off. So well done to everyone that managed to capitalize on this trade. There was a great example there of understanding what phase of the market we're in, understanding those higher time frame key value areas, and also having the fundamentals on our side as well. So this has definitely been trade of the month for me. I'd love to hear your thoughts on this trade, guys. So if you like this breakdown, give it a like, subscribe to our channel, and let me know what you thought in the comments below.